Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 13th of October. So we saw some really good action in the markets this week, and some levels that we were talking about last week certainly played the game until the CPI data came out in the previous session, which really knocked the market around. So let's jump into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that obviously the big sell-off kicked in fairly early in the session, and once that 20 moving average was breached, look, like I said in previous sessions, although we saw a little bit of positivity coming up and testing these bounds up here, we are still in a dead set downtrend. And yes, news does play a part and can certainly knock the dollar index around, which we'll have a look at a little bit later, which is going to affect all the dollar-based pairs, of course. It was at resistance regardless, and it has tested the 20 moving average and the 50 moving average several times over the most recent period throughout August and September. And we can see that we've nearly reached those lows again, just below the 63-cent mark. So that is a very big move down. And look, it is, I guess it's troubling for the market that the CPI has risen, which is not ideal. Obviously, the market did not factor that in. But that said, we only trade what we see, and realistically, even though we did see a reasonable move throughout the last week and a half, yeah, it was at resistance again, and now we find ourselves testing this important zone. What we've really got to look out for now is whether this zone is actually going to hold up or not. The 63-cent mark is going to prove a line in the sand moment for the Aussie USD, because in reality, if we do get a break below this level, it can drift very quickly down to the 60-cent mark, especially if we get daily closes, lower. Although we can see a bit of a rounding effect, we can see the MACD is rising, the market is flattening out. So yes, we are making a series of lower lows. The highs are not as low as they were previously, and there is quite a bit of a fight around this level. So that certainly has to be respected. Regardless of the move down, this level has started to slow down the momentum of the selling. The heavy selling that was prevalent right through this period throughout July and August has somewhat slowed down, even though we are seeing a big move. So realistically, what we're looking for is a roll reversal zone around this support. We know the 63-cent mark is a line in the sand for it. We know we need support here before we obviously start to go long. This is providing us with another trading opportunity. Obviously, I like what it's doing in the sense that, yeah, we can test the 20 moving average again on the upside if we get a little bit of a rounding bottom. So if we see a series of higher highs and higher lows on a smaller time frame like the 1 hour or the 4 hour, we can start to look for moves back up to the 20 and the 50 moving average. But of course, if it fails and it does close below the 63-cent mark on the daily, and yeah, more importantly probably the weekly, then next week we'll be looking at opportunities to actually continue the sell-off. But at this stage, although it has come back down here, we want to be fairly comfortable that it's either going to, one, continue the move, and if it does that, we've got further selling pressure to get us down to pretty important zones. You've got to go out a fair bit to actually see it. But in reality, though, we've got to treat the support with the respect that it deserves. It has slowed down the momentum. You can see that, and the MACD is telling us that, of course, as well. So if we get that rounding bottom, the instant trades that we'd be looking for are the ones up to the 20 moving average and the 50 moving average, which are these previous highs at around that 64.30, 64.50 mark. So interesting trading on the Aussie, but we're going to keep a very close eye on this level. If it's trading below the 63-cent mark on Monday, then we're probably going to be looking for a pretty ordinary time over the next week or two, and we'll be starting to target look, we've got to go a fair bit. We've got to go out a fair bit down to that sort of 62-cent mark, which is around this level here. We haven't been there, obviously, in quite some time. Basically in October of 22 was when we were there. So from a seasonality standpoint, we are really approaching the same time. It's October 22 is only 2 weeks away from being its annual anniversary of being at the lows of around that 62-cent mark. So in reality, if history is anything to go by, we have been down here at this exact time of year. So it would not surprise us to see that break, but we've got to treat the support with the I guess the respect that it deserves, because you can see that it was very important when it hit here, and that came down very quickly as well and bounced off and started the big rally up. So until it actually breaks that level, we're not going to be really interested in the move down, but treat it with a lot of caution over the next few trading periods. All right, we'll move over to the US dollar CAD now. And we can see that we've had a very similar reaction. Obviously, it landed on the 20 moving average. and bang, off it went. Look, yeah, this was a pretty important zone anyway. We discussed this level last week because we know that it was a fairly strong zone. The 20 moving average has been a pretty good indicator of where this one's going. Yes, is it helped by the dollar strength? Of course it is, but the reality is we trade what we see. We're not trading fundamentals here. We're trading technicals. This is what this video is all about. And the 20 moving average provided that launching pad. If it was going to go long, this was the place it was going to go long from. We know that we've got a lot of mini peaks here, so no real surprise to see the move up. Look, it's still at a point of resistance. We've got to remember that. Although it has had a good move off the 20 moving average, this 137 level is pretty strong. Okay, we've got the peaks right through here. We can see we've got a lot of price action through here to stop it. So if we get a move and a close above that level, so really what we're looking for is what's really going to be happening on Monday morning, because that's going to set the tone for next week. If we're trading above this level next week and we're trading above the 137, we're going to look for trades up to around that 137.80 to 138 zone, and that as an extreme break that level and back up to the 138.50, which is all good moves on the way up, but it does need to break this area here, okay? This is a pretty strong zone for it. If we're trading below that level and it does fail at this point here, the dollar strength might not be as strong as we need it to be, and it may roll over. And if it does that, we'd be looking for a move back down to the 20 moving average in the first instance. So I'd still be keeping the trades relatively short on this one. We're going into an earnings period in the US. Obviously, the next few weeks are going to be very crucial in terms of what the earning expectations are. So that's going to play havoc a little bit with the currencies as well. So I would be keeping the trades relatively short until that period is over. Let's move over to the US dollar yen. Absolute trading poetry the US dollar yen's been. We know this. Nothing has really changed. It landed. It did all the things we wanted it to do. It came back down, tested the 20 moving average, and then rolled up. Remember that prior to the CPI coming out, this was already heading up. This is not one candle like the US dollar CAD was. This has been happening for the last 3 days. You can see it landed on the 20 moving average, started to move up, and we've already hit, basically where you'd be going for. Like realistically, the previous high was the level that you'd be scalping off, and it gave us those warning signs well before any data came out. Basically, this whole week has been pretty good for it, really. Look, we know we're still approaching a very important high. There is resistance here around that 150 level. That's pretty much where it's at, 149.80 to 150. You've got to be very, very careful around this level, in the sense that it's trying to break to a high that it hasn't been to for a very, very long time. But it's doing all the right things in terms of moving higher lows everywhere, finding support at the 20 moving average where you would expect. My instinct would be to let it break through and then come back and retest that from above. That would be a far better trade for the long side, in my opinion. I think that would be a better trade, because then you got momentum on your side and you got confirmation of the break to say that it's not going to be a false break. If it rolls over from this point onwards and starts to break, I wouldn't be looking at shorting opportunities on this one until it's well and truly underneath the 20 moving average. So if we get a daily close below the 20 moving average, then I would be looking at the next targets down at 147.80 and to a bigger extent to 146.50, but it needs to break the 20 moving average first. So if we get a series of lower highs and lower lows from this peak, and a break at the 20, then we'd be looking at those targets. But realistically, I'd let it break through up here. If you're already in on this trade and you got this area here, that's great. The take profit zone is pretty much upon us, so hopefully you're able to capture that. But really, really good technicals on the US dollar yen, and it's behaved itself very, very well. Over to the dollar index, and look, no real surprise here. It's broken above the 20 moving average. As you can see, it's gone pretty quickly as well. Obviously, the data has played a major part in that, but the euro is obviously the one that we're going to be looking at. So this has been good. It's got itself back above the 20 moving average, and it's been extraordinarily strong. But really, the euro is where the trading's at on this one. And as much as we've been in a downtrend, look, I talked about this during the week. Although this move has been strong and sustained on the euro, we always have to remember that they're still in an absolute downtrend on the longer time frame. You can see that the lower high, lower low sequences have been in play for a very long time. And really, this is just a pullback to a 20 moving average, which is, it's done plenty of times on the way down and has not stopped it. Obviously the dollar index, rising has played a massive role in the euro actually selling off from here, but it finds itself at that point where, if we break through that 105 sort of 20 area again, the 104.50 is a logical target for it, where it has already been previously. That's generally the easiest target. So just be mindful on this one though that it was news related and it sold off very, very quickly, especially towards the end of the session. So realistically, what I would like to see from here is either a recovery at around the 105, and if it does that, that's great, and we'll look for moves back up to the 20 moving average. But if it fails and closes below the 105, that 50 points is what I'd be going for to the previous low, and then we'll reassess if it gets there. So trading above the 20 moving average, then we look for a move up to the 106 and a break of this level, then we push down to the 104.50. But it's at a little crucial zone now. We need to let another session play out to really see what the extent of the CPI data is. And then we'll look at the US dollar, or the US 500, sorry. Look, no real surprise here. Obviously, it did in sync with a lot of the other indices. The Russell 2000 sold off a lot more than this. It was 2.5% down actually for the session. So in reality, this wasn't even anywhere near as bad as it could have been. It did recover towards the end. What's really going to play the important part is what the next session is going to do for us here. Is it going to continue the recovery and push back up? This is a very strong level for it. The 43.50, obviously it's pulled itself back up. It got to as low as 43.20. It pulled itself up effectively 1%. Around this level here, is very, very strong support, as you can see right through this level here and right through there. And it's above the 20 moving average again, which is just as important. If the next trading session is above this level and we break past the previous high of 43.80, then all is looking good and rosy. But remember, we are going into an earnings season where the US 500 is going to be affected on a daily basis, depending on how companies report. A lot of reporting is happening next week, so just be very mindful of that. And it's a really good time to keep your trades relatively short to make sure that you don't get burnt on the flip side if they start to report ordinarily or the market doesn't like what it sees. So keep it relatively short would be my take on the US 500. I'd be trading between the 20 moving average and the 50 moving average in the first instance. But if we're trading on Monday below the 20 moving average, or even worse, at a new low from the 43.20 or lower, then I would be starting to target the extreme lows that we've seen most recently at around that 4,200. But yeah, again, earnings are going to play an important role in where this one moves over the next week or two. So hopefully you've had a good week's trading. We've had some great opportunities and levels have held up very, very well. So hopefully you're able to capture some of those. Have a great weekend. I look forward to seeing you all next week.